we're talking about today, or what I wanted to sort of bust in you guys' preparation in this workshop, is about the risks of being in business. And we've spoken about the fact that there's a lot of people in business or getting into business, but they've just got ABNs or they're partnerships or sole traders. And I know that's fraught with danger, but I just wanted to get you guys, the experts in this zone, to help give us some guidance on what's going on in this space. What are the risks associated with being an ABN holder, or a sole trader, or a partner in business?
Yeah, true. Well, there's actually 400 new businesses registered each week.
Wow. Are you serious?
Pretty big number.
Crazy.
That's nice. Is that in Brisbane or Australia?
Australia.
400. It's amazing.
It's quite a few. So.
But that would make sense. Like Uber drivers, they're new businesses.
Yep.
In a sense. Yeah, cool.
That's right. So, and what that normally means is registering an ABN. And an ABN can actually be registered to a sole trader. You might have heard the word, partnerships, trusts, or companies. They're the sort of common business structures. But the majority of people start up as a sole trader or with a mate or a friend as a partnership.
And why do they just go straight to sole trader?
So I believe a big thing is the cost of it. It's very easy to go and register an ABN, but I think the problem with that, well, there's two main things. You might ask the question, what could go wrong? It might cost you nothing to go and set up an ABN, but what could go wrong? Well, two big things, two massive things. The first one is you'll give 49% of your profit, potentially up to that amount, to the tax man.
Wow.
That is ridiculous. No one likes to pay excess tax. A 49% tax is ridiculous. Second one is there's actually no protection from the risks of your business to your personal assets. So your family home, and we've actually got a bit of a diagram here. Your family home, the two cars, the shares that you invest into, your investment property, cash in the bank, they're all exposed to the risks of your business. So, sole trader, don't do it, even though it's free.
Oh.
Jake.
Okay. Can I ask a question?
Yeah, absolutely.
So we're going into business. Most of us, when we go into business for the first time, weren't born with a silver spoon in our mouth. So what happens if we have no money and we don't have a house and our car's shitty and it doesn't matter if it gets stolen anyway? Does that change the dynamic?
It's a long-term investment, really. So if you don't set up in the right structure from day one, then you're going to have problems down the road.
Yeah.
No one would go into business without the intention of building that business to provide wealth for themselves and their family. So while it's not that situation now, and you don't have shares, commercial property, investment property, the intention is, or the assumption is, that you probably will in time.
Understood.
Yeah.
And I've read a bit, and they've spoken about the chance. You've got one chance to get it right from day one. So let's say I've got nothing, but I still don't have the money to be able to get these structures in from day one. And I decide to get it in place in day 366, so a year after.
Yep.
Do I miss out on anything, or is it hard? Does it cost more? What's the implications of that?
Yeah, great question. So on top of the cost to set up the structure in the first place, so you've got the same cost to set up a company or a trust, so anything but a sole trader or a partnership. You've still got that same cost, but two additional things happen. Actually three. So the first one is capital gains tax. So you're selling your business to another entity or another company or trust. Now that sale means you've made a gain on what your business is worth.
So you're saying that if I start my business as a sole trader and then I set up a company and trust and I hand it over, that is like I'm selling it?
Yep, you're not getting any cash, but you've got to pay tax. You've got to pay two taxes. The first one is capital gains tax. The second one is stamp duty.
What if I only sold it to myself for $1?
People have tried that, Harvey.
Yes.
And
are they in jail?
they are if they don't come forward. But basically, the ATO and the Office of State Revenue, so they look after stamp duty.
Wow.
They come after you and say, well, actually, you sold it for $1, but really it's worth $100,000 or $50,000 or $1 million, and they'll tax you on what the market value is, not on what you paid for it.
Understood.
So you still get, unfortunately.
So if I was going into business is there a magic number or a guidance price-wise as to what I'd be planning on turning over that would actually justify these structure setup costs?
Yeah, so that price or the turnover range is around about $100,000. So if you're turning over 100,000 or more, then not only are these different other structures going to protect your assets, but they're also going to give you some flexibility from a tax perspective, so you're not hitting that 49% tax.
So that magic number is 100 grand, and how soon would I be looking, or how soon do I need to make that 100 grand to justify setting them up from day one?
Yeah, so my guidance there is within the next 12 months. So if you're going to turn over 100 grand or more in the next 12 months, then get a structure in place.
Understood. So waving a magic wand, let's say, Jake, you've spoken to me about a bit of a fun project that you like to do with a food truck.
Yeah.
What sort of food do you want to sell in your food truck?
Like Mexican food.
Yeah, that's awesome. A little bit like, have you seen the movie Chef?
Yeah, that's right, exactly like
Can
Chef.
be like Chef.
Get
So,
a tattoo on my arm.
you've got heaps of tattoos already.
Yep.
So guys, let's put your reality check hats on. Jake, you're going to sell some mad pulled pork, and what's it going to be like $3 a bun, and I'd probably be there on day one by 100 of them. But are you really going to spend, how much does it cost to set up companies and trusts?
Anywhere between $2,500 to $10,000, depending on your situation.
And so you're really going to spend $3,000 before you've sold one bun, one sausage, any barbecue sauce.
Yeah, absolutely. It's just so much safer to sort of like, I wouldn't be wanting to go into a business doing it for peanuts. And from a risk perspective, I don't want to be sued and have them take away my house or whatever else in the process. I think for me personally, I would sort of reach out and do that right from the start, because if someone sues me and tries to take away my food truck, there goes my business. You know what I mean?
Understood. And betting, accountants typically conservative in their advice. You've got Jake, all aspirational, wants to start his food truck, chef style, make some beautiful guanos. He's not made a dollar yet. He's not even got to a market, doesn't even have a great recipe, although I can sell you mine if you're interested.
No, it's alright, I've got my own, bro.
IP Assets Trust if you like.
20k.
That's it. Like, realistically, is your recommendation $3,000 up front before any buns, any butter, any sauce, any of that has been bought?
If Jake is intending to turn over that 100k or more, then yes, absolutely. So you need to spend this money before you start, keeping in mind you want to actually have a business model that you intend to make money.
Yeah, understood. Cool. Loving it. Thanks, boys. Loving it. Anything else?
Yeah, well,
Sorry, I did cut you off.
Jake, we talked about sole traders for a short moment there.
Yeah.
But you reminded me, not that we see it too often, but you reminded me of the increased risk or even double risk of partnerships. Can you tell us a little bit more about what else you're committing to when you go into a partnership?
Yeah. So a partnership is it's almost very dangerous unless you trust the person with your life, unless you're sort of married to them. You're running big risks in going into a partnership. What it means to go into a partnership is like two sole traders coming together and with the aim of making profit and to make money. And so they're both in effect liable for each other's decisions. So let's say Ben and I go into a partnership together in our food truck. And
Did you really go into business with Ben?
Maybe not the food business. But anyway, let's say we go into business together and we buy a truck, we sort it out, we're in business for 3 months and we're not making any money yet. And Ben decides, hey, we need a new stovetop. Stovetop is going to cost $15,000, but you know what, let's go ahead, let's do it. So he goes out, he buys it, he signs a contract with the partnership. Signing the contract, I'm liable for all those payments. So after 3 months, we might not be turning over anything. We might not be able to pay for the stovetop at all. But because Ben has signed off on that, we're both liable. So Ben decides, oops, I've made a mess. He's got no wife, nothing here. He takes off to America. I'm the only one left in Australia. They'll come after me. So it's my house, my car, my little push bike on the line for a mistake that my partner may have made. So that's why it's sort of really dangerous to go into business when there's no structure. I'm not saying don't go into business with someone It's just make sure that you've got the right structures set up within that agreement.
Cool. Yeah. So what does it look like? What
do we give a tick to? Is we've got a trust here, so you can be in business as a trust, and the other alternative here is a company. But we do not want to be a partnership or a sole trader.
And sorry, Benny, we're missing a bit of context. What is this wall? You've got I see a big black line in the middle.
Yes, so this is our, what we call a risks and assets diagram. And this is where we put all of your business risks over on this left-hand side.
As an example?
As an example, I've actually got them up here. So suppliers, customers, employees, and even your shareholders, if you do have more than one owner of your business. And over here is your personal wealth or your assets, which includes all of your family members, even your parents. Things like
your full parents. Could you have found a
At least they're in
that?
colour, okay? You're all. Look, no.
That's it.
Wrong colour, bro. You're looking at my family.
The 2 cars, the house, the cash in the bank, the commercial property, shares, investment property, not your super, that's protected in its own way. But all of these, this side of the diagram is your personal wealth. And our goal with business structuring is to put this line in the middle to separate the two of them. And that's that's something you do not get as a partnership or as a sole trader. So
understood.
please don't do it.
Don't do it. Very cool. Any other thoughts, questions come to mind? FAQs or facts?
So the biggest thing I can encourage you to do, a lot of people do start with an ABN as a sole trader, and they leave it to consider changing to a trust or a company. And that's mainly because I don't believe anyone's out there giving the education on what the alternatives are. So they might leave it, and anyway, they might be turning over this $200,000 or $300,000 business, making great money, and they're stuck in this structure paying 49 cents in tax. They need to change that. So there's the cost of the structure, there's capital gains tax, there's stamp duty, and there's also just the inconvenience of having to set up new bank accounts, change all your invoices over, change ABNs and all that sort of stuff. While it might be cheap and to start off as a sole trader, just even those aspects are not worth leaving it very long at all.
Yeah, understood. Even, price aside, I think what really settled in for me was when Jake said before, you can be in business or you can be in risky business. So what's your choice? I'll take the one that I can sleep at night, because business is hard enough as it is already, let alone having many panic attacks anytime. And a letter comes through the front door and you can see some red paper inside you. Good times. I had a really powerful question. It's probably one of the most powerful questions ever asked.
Ever.
Where is it?
Oh yeah. So can we finish off with give me an example. You don't have to tell them the actual circumstances.
Yeah.
But what's a situation that you've had recently, whether they have been an ABN or sole trader, or they were just in a structure and they didn't know why the hell they were in it, or if it was the right thing. So just give me a real example.
Yeah.
No names necessary, but we know who you're talking about.
Alrighty. So the most common structure I see that's not a sole trader is actually a company. And they have no idea how to use it. In fact, they've got loans in that company, and those loans are because they've taken money out from the company and spent it personally. Now, there's some pretty hectic rules around that. I'm not going to go into it on the video, but there's bad things that happen when you just rip money out. And there's a lot of people that they've got. I've seen this exact thing. Their accountants are making them pay about 30 or 40% more tax than they actually need to in these situations.
Retards.
And there's a very simple fix to making this right, and also communicating why we need to change how we're doing things when we take money out of companies to those clients.
So there's good ways and bad ways of pulling money out of companies and stuff.
Good ways and bad ways of anything, really. So pulling money out of trust companies, but this is a very common one when you when people just pull money out and they aren't paying tax on that. It does catch up with you, and if you don't treat it right, then you're paying excess tax you don't have to pay.
Understood. And can you give me, like we've had quite a few new people join, so can you just sum up what we've discussed so far as your wrap up?
Yeah.
To get everyone else who's new to the feed up to speed.
Yeah, no worries. So we started talking about the problems with setting up a business as a sole trader. And the two main things there were paying 49% tax and then exposing your personal wealth or your personal assets to the risks of your business.
Yeah.
Jake touched on how that risk is doubled when you are in business with a business partner as a partnership, not using one of these funky trusts or companies.
Mm-hmm.
Which is you're basically at the mercy of the other person for your personal assets, which is a situation you do not ever want to be in.
Yeah.
And then, what do we do then?
So what's this black line represent? 'Cause that's, to me, the key.
Yeah, the key. So this black line here is separating your business risks on the left-hand side from your personal assets. And you do not get this separation without being, if you are a sole trader or if you are a partnership. You need a handy company or a trust or a combination of the two to be able to get that separation and the tax flexibility that comes with each of those structures.
Yeah, awesome. Makes sense. So I understand we get a workshop this Friday, and that's what I was dropping in on you guys doing preparation for.
Yeah.
Can you just give me the gist of who's best for it in terms of attendees?
So the best type of attendee for that workshop is someone either new to business, who's just starting, they're an employee who's considering jumping ship and running their own business, or
that's not you, is it, Jake?
Not yet.
You're happy here?
Not right now. Yeah. For the time.
Or the third type of person that this would suit is if you have a structure, if you've got a company, or you've got a trust, or even if you've been running as a sole trader and you have no idea what any of this is or how to use it, and you want some answers that you haven't been getting from your accountant, that's another a person who would be perfect for this workshop.
Yeah, that's cool. I was talking to Dad about that this morning. He's exactly in that category.
Yeah.
He's got his trust, but he don't know what to do with it. And this isn't Dad's case, but I've heard of a lot of people telling me that business owners telling us that they just want to understand how this stuff works. They had enough of accountants just saying do this and not explaining why, and not knowing why they're doing things. So it's like blind trust. So I'm looking forward to filling in the gaps for a lot of people. Cool.
Yeah. Alrighty.
Okay.
And then we'll be going into the differences between the two. We're going to touch again on why not to be a sole trader or a partnership. We're just going to dive deep into what are the differences between companies and trusts? How do you get the money out? Who controls a company or trust? How do you do multiple businesses? And also on this personal wealth side, the other thing we're covering is if you want to invest in shares, property, you want to use your superannuation to invest, how do you do that? Because you can do that in your own name, you can do it with your spouse, you can use a company or trust for that stuff. So we're going to dive in deep to both the business side of things and also the investments and how to structure them in the best, most tax effective and asset secure way.
Wow, that's